Hi, Scott Varilek here, Koima Varilek Trading in Sioux Center, Iowa. We've got a pretty much two stories, I guess, to the cattle market. One in the upfront and one in the back, and then they're a little bit different. So, upfront news is a little rough. We're struggling on the Fed cattle contract. We're struggling in the cash market a little bit. We've got packers having some slowdowns, chains moving pretty slow. We've got a lot of disease, flu, kids with the flu, COVID. 'Tis the season for that to be those bugs to be running, and they're running slow. They're not buying as many numbers. The daily kills are down. So packers, the buyers are out with limited bids. They're not out just in the country buying whatever they can. They're where they have limited numbers. So that's a little bit of a struggle to get cash cattle moving. We had some 140 to a regional early, then there was some 139 to another regional. There's been some 136 in the south. Spray trade is pretty sparse. I wouldn't say it's up and down the road. We've got bids, so it's a little slow. And then we also look at the carcass weights. That's still something to note. We're up another pound again over last week's weights, and our carcass weights are 12 pounds over a year ago steers and 12 pounds over a year ago in heifers. So we've got a lot of meat on the market. These cattle are carrying quite a bit of weight. We've had excellent weather. Gains are outstanding, so that's all been favorable for gains, but we do have that extra weight on the market, pounds on the market. So, and if we continue to back them up here, if the packers don't get real aggressive, that's going to just kind of continue to compound on itself. And the front month has been the struggle. We always pump up the futures real high, and then when we get to that front month, it has to tail off a little bit because we're not quite as good as what we pumped into the futures. But out into the deferreds, a lot of optimism. We're getting into the upper 140s in some of those deferred live cattle contracts, over 180 on some of those summer and fall feeders. So we know that our cow herd's getting smaller. We had a very large cow kill again this last year, the biggest number since 2011. In 2011 and 12, we had dry years. It was dry, so herd liquidation. And what that did is that set up the 2014 rally that we had, because we needed to pull heifers back out of the feed yard to make some cows to replace the herd. So that was where we got our 2014 rally from. And there were some other factors as well. Milk prices were really high in 2014. Just in the last couple days, milk's been on a charge. It's a pretty steep chart right now. I mean, they had a sharp rally, so it's too early to see if that's going to sustain. But if suddenly we put some profitability into the dairy industry, maybe it'll relieve some of the stress that the beef industry gets from beef on dairy. Maybe it'll take some of those pounds away, as maybe they're going to try to breed some more heifers. So going to keep my left eye on that one a little bit, because that was one of the factors for the 2014 rally. But we have a lot of optimism in the deferred live cattle and the deferred feeders, and for good reason. Cow cycle demand looks to be rock solid. That's still been rolling on strong. We have $9 ribeyes now, and they were $16 a pound. So down nicely. I would think there's enticing some of those consumers to want to look towards beef a little bit harder again. So call us, Koima Varilek Trading, if you have any questions. The risk of loss in trading futures and or options is substantial. Have a good day.